Welcome to the Third Decade Podcast, where we believe every young adult deserves the confidence to take control of their financial future. Whether you're just getting started or you're well on your way towards financial independence, we're here to give you the tools and guidance you need to build a life that aligns with your dreams. Let's turn financial uncertainty into opportunity together.
Hey, Third Decade community. I'm your host, Nikita Wolf. Today, I am joined by Third Decade CEO Joe'Mar Hooper.
Well, good morning, good afternoon, wherever time it is. Hi, everyone. We're excited to be here with you.
Today, we're going to be discussing life insurance and what to look for when seeking out a policy, who needs it, who doesn't, as well as some different terms and understanding the differences between them.
Absolutely. So life insurance is a big topic for folks at Third Decade. So we're excited to be able to have this opportunity on our newer platform that we have today to be able to talk about this. I think we should take a moment of breath to talk about this new platform that we're on a little bit.
Yeah, I think this is quite the upgrade from our previous setup, our home office setups where we're using blankets and things to record. We are recording with Tucson Podcasting Studio, and it's an awesome place. You can see we're excited to be here and be on YouTube finally and have some video to share with you all.
Absolutely. So this is our first opportunity that you get to kind of see us along with hearing us when it comes to the podcast. And we have a whole schedule planned out for next year and beyond as far as providing you all with the timely topics and information that our Third Decade family is interested in learning about. So I'm excited.
For sure. Yeah. Same here. I think we're going to go ahead and jump in. Joe'Mar's going to share a little bit of a personal story about life insurance and health and just kind of jump in that way.
So I mentioned that life insurance. Our goal here today is to kind of demystify life insurance a little bit because it can be kind of confusing, there's a lot of misunderstandings. There's a lot of people doing it wrong. I have done it wrong a ton in my life. So, I remember when I was in my 20s, which I'm way older than that now, but when I was in my 20s trying to figure out life insurance and just, I had kids at an earlier age and, I was married in my 20s and just trying to figure out what it is that I need with life insurance. It was super confusing and I didn't really have anybody to turn to or folks to talk to. So me and Ty, my wife, went through the process of looking at different insurance carriers. I had some health challenges in my 20s, which I really wish I would have gotten life insurance before I had those health challenges because I was shocked at how your health and other factors really play into your ability to get premiums and overall your ability to get insurance. So it was kind of a daze for me, just being able to figure out insurance, figure out how much I needed. I had no guidance there either. So our goal today is really to figure out and just present some facts and some items as far as what does insurance look like for you in your personal situation.
Yeah, and how to seek out a policy and not get taken advantage of by salespeople. Because I know for myself, when I recently started looking into life insurance, that was a struggle as well. Even being as well equipped on this subject as I am, it still was like an uphill battle, making sure that I was seeking out a good company that wasn't just trying to sell me unnecessary products. So,
and not to mention the importance of having it. We're going to demystify it, but we're also going to tell you that it is vitally important, depending on what, and at any stage in life that you're at, that you have to have life insurance. I cannot tell you the times I've seen folks pass and they did not have life insurance, or where families had to turn to places like GoFundMe or something when it comes to having to figure out how to pay for end-of-life expenses. So we do not want that from anybody in the Third Decade family. We want you to be well-informed, and we want you to be proactive when it comes to choosing your health insurance plan. So I think I want to start with a question for you, Nikki. So one of the things that it's kind of dizzying trying to figure out all the terms and things around life insurance. There's we can bandy about probably 16 different types of life insurance at this point in time. We hear dozens of labels for the products, and people's eyes really start to gloss over a lot when you hear about life insurance, and it can be overwhelming, as I mentioned. So let's try to start demystifying that amongst our Third Decade family. So can you talk a little bit about the differences in life insurance and of the different types?
Definitely. So primarily, we're really going to segment these into two buckets because one of those buckets is where you hear the 20 different terms to describe the same thing. Or, maybe a version of the same thing. But we have term life insurance, which Third Decade's a huge advocate for. 99.9% of the time, that is the type of insurance that we are talking about when we're encouraging you to go get life insurance. Whole life insurance is the second one. So whole life has all sorts of different names that will go along with it. indexed universal life, permanent life insurance. Anytime you see the word guaranteed around an investment performance or saying there's a cash value on a policy, things like that, those things all fall under whole life insurance, and they are very different costs. Whenever you call an insurance company, whole life insurance is oftentimes something being sold with a commission. They can make commissions on term life insurance policies, but it's much, much smaller. But for instance, a difference in price for like an annual premium on a term versus whole life might be a few $100s for a term life policy. And it's all or nothing. If you don't die within that term, that set period of time that you've established with the insurance company, you don't get anything. But for that same policy where you're getting the $1 million, if you die within that 20-year span or whatever term you've established, you might be paying a few $100s for the term. You might be paying like $6,000 for the whole life insurance policy. And the difference in that cost, they try to justify by talking about the investment performance. But whenever we're looking at things like index funds and mutual funds and long-term investing, like Third Decade teaches, those investments typically underperform pretty greatly, and your money is much better spent by buying a term policy and investing the difference. So I will specify there are very few examples of when whole life insurance might make more sense. This would be if you have, for instance, a child who is born with a disability or maybe becomes disabled, and you know that they're going to be financially dependent on you for their entire life. A whole life insurance policy might be something that is an inappropriate fit for you and your family. Another time that you might see it is if you are somebody who's already maxing out all of your retirement accounts. If you are, very jealous. But basically, it's when you've got all your other financial ducks in a row, you have maxed out everything to the limit, and you just want to be able to live, or you want to be able to leave even an additional legacy. A whole life insurance policy is a way that you can do that as well.
So I think that's a big point of distinction that we should highlight that before we kind of move on. I think that when we first go to try to get life insurance from a lot of folks, you're going to hear a lot of sales for a lot of whole insurance. But you know, to me, the takeaway is that most people will probably do better with term. Is that correct?
Most definitely.
Yeah. And there are certain situations where whole could be beneficial, but for the most part, get into a good term plan and kind of start going from there as you move forward with your family, right?
Yes, exactly. And, you know, as somebody, if you're in your 20s or 30s and seeking out one of these policies, it is very, very common that you might have a friend who means well, perhaps, but that is trying to make their own living, and they sell you a whole life insurance policy. I've known a few different people this has happened to, because it's somebody that you trust, and maybe they don't know better themselves, so they're trying to, you know, make a living and get you a product that they believe in at the time before they necessarily know more about it and some of the downsides. But it's very common to be shifted towards a whole life insurance policy, because when you Google like insurance companies, these are the companies that are paying for sponsored ads. And whenever you call and try to find a life insurance policy online, it's very easy to find the companies that have paid for sponsored ads and are going to be putting you on the phone with a salesperson. So you sometimes have to really advocate for yourself and be very clear and direct about that term is the only thing you're looking for, and not entertain the other options that they're necessarily trying to sell to you.
Absolutely. And one of the big things we want to always do at Third Decade is get you guys started investing as soon as possible. So if you're taking a lower term life plan, and which is lower than a whole life, you can invest that difference into the market and start your journey as soon as possible. So that's very important of a distinction. We really wanted to make sure that was highlighted. So thank you, Nikki. I appreciate that.
Most definitely.
But when we talk about like premium costs, I mentioned that I bought my premium when I had some health issues and I didn't know, and it was a lot higher, and the sticker shock was there that I didn't really know what it was. So at that age and at that time, I was, there's a lot of stuff going around in my head. I had no idea what a cost should be or what it looks like. So I think most people don't know kind of the factors that play into what goes into your premium, like at all. So maybe we just touch on a little bit upon what the factors that make up your premium amount.
Yeah, there's lots of different things. There I mean, they're an insurance company, so they're trying to assess your risk. So your risk of dying within that set term that you've selected. As an aside, these terms typically vary anywhere from like 5 to 30 years. I think you can get up to 40, but it's a little bit more rare. But oftentimes people are buying a 20 or 25-year policy. So the things that go into that are your age. So buying it at 25 is going to be cheaper than buying it at 35 because you're more likely to die in 20 years at 35 than you are at 25, as morbid as that sounds. If you are on any medications, certain medications especially will have a higher impact on the premium. Your health history, obviously, for the same reason as your age. Your mental health history is also something that will impact your premiums, which it feels sort of unfair at points, but that it's something to keep in mind. And I'm sure there's more to the set of things that they're looking at for that. I know for myself, when I was recently seeking out a policy, I am expecting twins, and one of the companies actually would not even insure me because they saw that as too high of a risk, being a classified high-risk pregnancy. So lots of different things that can affect that. Now, I don't think that's the case necessarily with all pregnancy, but I'm not 100% sure on that one because they've said it doesn't, but I'm not entirely sure. Are there any other things I've left out that you can think of that would impact the price of life insurance?
No, I think there's some surprising things in there that, that as we were talking about getting ready for this and looking at some of the insurance pieces, mental health. That's one thing that I had no idea that they really factor in when it comes to premiums. And additionally, I know, unfortunately, you found out about the twins aspect. So this is almost as confusing as credit scores for a lot of people. It's like what goes into that credit score, what goes in there when it comes to being able to get your interest rate. Being able to get an insurance premium is pretty dizzying as well, too, it sounds like.
Yeah, and I mean, I think this also goes to show again that it's better to get a policy when you're 25 than 35 because more than likely you're going to have a few more things crop up at 35 than when you were in your 20s, unfortunately.
We always talk about time being the biggest asset we have. And if you start early and you really figure out how to do things at an earlier age, you're going to really be able to take advantage of the lower premiums and just be able to start things sooner. So that makes a lot of sense. But I think one thing we do want to touch on too, though, is what's some of the thoughts as far as how do we even go about picking which insurance carrier to go through? Because there's dozens of them out there. They're all going to be trying to sell you a different dozen things. So what's some thoughts about how do we even think about who to go through?
So I'd say probably the number one thing that comes to my mind is the company's ratings. You want to make sure that if you're going with an insurance provider, that they have a good history of actually paying out.
It's important.
So you'll see things like A+ rated life insurance company, things like that. So looking for the company's ratings and comparing them. I know places like NerdWallet and probably Investopedia, those are two resources Third Decade refers to a lot. They will have things like that. You also obviously want to shop around a bit. So I would say probably at least 3 different quotes to be able to see what they offer versus what they cost. How your experience is on the phone with them. I know for myself, I had a pretty unpleasant experience with one of the companies that I was seeking out a plan from. Making sure that they offer the type of policy you're looking for. And I guess just the company's financial background and their history. I hate to say this because it's so informal, but Reddit's a great place to see people's personal experiences with companies.
That's true.
And I definitely referred there whenever I was looking myself as well.
One thing that I think we should touch upon, let's go off script for a second, is life insurance at your job. I think that's an important aspect that's a lot of people don't understand the benefits that they have, and whether that's a 401k or whether that's your health insurance, but majority of employers do offer some type of life insurance plan. I don't want to say majority, but there's a good number.
The ones that are doing retirement and stuff like that are offering a good benefits package, yes.
Absolutely. 100%. So let's maybe, what are considerations should we maybe even think about when it comes to making sure that you review your employer plan and that you are able to capture that, because that's probably going to be a lot cheaper than going to the market if you have access there. Going to the market should be supplemental to what you got at your job, but talk about that for a couple seconds.
Yeah. So a lot of companies will pay for the first chunk, and then you have like a very discounted rate past that point, like per, $10,000 or however your organization or company does it. And actually, I'm glad you brought that up, because for a lot of people, if they don't have dependents and they just are trying to have a little bit of a fail safe in case something happens to them, that their family doesn't inherit the financial burden of planning a funeral and stuff, sometimes that employer-sponsored life insurance is actually totally sufficient.
Yes.
I will oftentimes see that it's just like 1 times your annual salary, and then you can pay a little bit more if you want it to be 2 times your annual salary and stuff like that. But it's a really good starting place. And of course, if you have children or a spouse that is financially relying on you, you're going to want to go above and beyond that. But theoretically, you could reduce how much term life insurance you need. If you've got $100,000 somewhere else, you could reduce your other supplemental policy by a smidge.
I think you said something very important. You want to put yourself in the shoes of your family after you pass as well, too, because they're going to be the ones that have to take care of your all the things that happen at the end of life. Do you want to leave them with a major bill, whether you have dependents or not? Do you want to leave them with a major bill when it comes to your burial, when it comes to all the planning that's going to take place at the end of life? I think it's important for us to even have to capture that, whether that employer portion or a small portion out of there, even if you don't have dependents in a family at some point in life.
Yeah, absolutely. I will also share just a personal anecdote. While I was shopping around for life insurance a few months ago, I called New York Life because I had seen somebody on Reddit spoke highly of them, but I was like, I feel like that's one of the companies you're supposed to be wary of. I'm not sure, because I was sure that they probably sold both types of policies, but I assumed that there was going to be some risk in them definitely trying to peddle a whole life insurance product. So I went in with a very clear direction. Thankfully, I knew how much life insurance I wanted. I had done all those calculations because of my financial background already. But whenever I called, I spoke with a guy who was extremely chatty, doing the typical salesperson thing where they're trying to be relatable. And I said, I'm just want to be frank right off the bat. I'm not looking for anything whole life. I'm looking for a 20-year term policy in the amount of $1 million. And I am just looking at, I'm comparing different companies and what can you guys offer me? And he basically just skipped right over what I had just said and was like, well, why are you opposed to whole life insurance? And I explained to him why. And then he still continued to not provide me information on a term policy. So I kind of pushed back on it again. And I was like, I appreciate your efforts. I understand you guys make commissions on these, but this is what I'm looking for. And I kind of reiterated the stipulations. And he sort of did the same thing again. So all of that is to say, you can go in with the best plan. Some salespeople, and I'd say, unfortunately, maybe good salespeople, are very pushy. And you really have to know to just put your foot down, and that it's okay to be, I don't want to say rude. You never want to be rude, but just to be firm. That's a better word for it. To be firm and say, you know what, I don't know that this relationship is going to work out. I'm going to go ahead and let you go, and I'll be seeking out a policy somewhere else. Absolutely. And that's what I ended up having to do with them. So it might happen to you too. Don't be too surprised if you call around and you're like, why is the only thing this person's talking about is a permanent life insurance policy or a whole life insurance policy? That's a very real possibility.
So you have to be an advocate for yourself. That's 100%. You have to have your mindset. It's kind of like a timeshare sale at the end of the day. Oh my God. Yeah. We've all been there before, right?
Yep.
So you mentioned something that you said you when you made that call, you specifically wanted a $1 million policy for your family. So knowing you, I know that there was a lot of calculation as far as why and how you got to that $1 million number. So I think that's another aspect of choosing insurance that we don't think about. How do you know what amount or what number? Should I get 100,000? Should I get 50,000? Do I want $5 million? How do you know that number that you need to be choosing for your family?
Yeah, there's a handful of things that play into that number. First of all, you want to think about the debt that you have and whether or not your spouse is going to inherit that debt. Things like federal student loans, I'll actually just really quick as a side note say, if you have a spouse with federal student loans that passes away, those go away. That's not going to be inherited by the family. So that doesn't have to be considered in the debt. But things like your mortgage or an auto loan or a personal loan, credit card debt under there, things like that, those things can fall back on the family. And if you are used to living on 2 incomes and now you have 1 income, you might choose to instate a policy that can basically pay off those debts in full right off the bat so that that surviving spouse is not left suffering with the monthly payments on those debts.
All right, so debt plays a big factor in determining what amount you want to have for the future. Obviously, you don't want to leave your spouse or your family with some humongous debts that can't be paid off at the end too. So what are some other factors? No, income's a factor, correct?
Income, most definitely, yeah. You, especially if you guys are like very uneven earners, if one of you is the breadwinner, or life's just expensive now. I know most families just actually need 2 incomes to survive. So you need to factor in what amount of their income is essential to your survival as well. The number of dependents you have, if I was only expecting to have 1 baby rather than 2, perhaps I could have shaved down my policy just a smidge. But the number of dependents that you have plays a big role in how much coverage you need, as well as financial goals. And I'd say that's where it can really add up. So things like, if you want to pay off the mortgage, that's a big chunk right there. That was something that I did decide to put in my policy. And funding college for your children, whether that's in-state or out-of-state, that's another good chunk of change. Retirement planning and how much your spouse is going to rely on your retirement as it currently stands. So factoring that into your number. There's just all sorts of things that make up that number and help inform what that policy should look like. So those are just a few of the things that come to mind. And of course, if you have any other financial goals, you might want to leave something to your kids that might increase the number as well. So.
It's funny. I actually was having a conversation with my youngest daughter yesterday. She's a sophomore in college. And I was like, 2 more years and I can reduce my life insurance premiums. College will be paid for. You'll be done with it then. So that's a major consideration as well. So there's some other, nuanced perspectives as far as being able to determine your life insurance that some terms that I hadn't heard before we started talking about this. So can you talk a little bit about some of those?
So if you are like a CFP, there are terms like the human life value approach or the human life value method. That sounds a little bit dark, but essentially you want to estimate the value of a person's earnings over their lifetime and, what debts they have, what education funding you want to do, how heavily the family relies on their income. One of the things in that approach that you want to make sure of is that you are excluding the part of that person's income that they use each year. So for instance, maybe somebody is contributing 80% of the money they bring in never even goes to them personally. They're just like really funding the family's expenses. So you would reduce what you're expecting that person to contribute to the family, like their overall salary. 20% of it is consumed by them personally. So you could estimate that into the policy amount that you need as well. And another thing I forgot to mention in the last bit was the end of life period or the end of life costs, like a funeral, estate expenses, if you're going to incur those, as well as an adjustment period. I think the adjustment period is a really, really important factor to consider. Most people are going to need a few months to a year to feel like they can function and, resume with life as normal. After a spouse dies. So giving them the financial flexibility to be able to do so, that might mean that you're just right there adding, an entire year's salary plus what you expect your end of life costs to be. So you want to encapsulate all of that into the approach that many financial advisors are using whenever helping you decide on the amount of a policy as well. And then I'd be remiss to not share as well. There are life insurance calculators online that will make this very easy for you. We have one that we built out that's actually using that human life value method that we'll share in the resources on this episode. But there are all sorts of online calculators. Make sure, again, that you're looking for a term life calculator, but they will ask you similar questions to help you decide what amount you should get.
As you were talking, I think of an inside joke that me and Ty have about. I always joke like if I'm passing, I would like you to heal in Jamaica. So we took that into consideration and thinking about, okay, if I am going to pass, if we have life insurance, I would like you to be able to take off some time and be on a beach. You know, I'm sure it's going to be a lot easier to heal on a beach in Jamaica than it is in Arizona when it's 115 degrees in the summertime. So
You're absolutely right. You're absolutely right. And I think it's just such a gift to be able to give that flexibility and that, comfort. One less thing for your spouse to worry about in the event of something happening. And I love the Jamaica reference. That's great.
She's going to stretch out that morning period as long as possible. The beach and the Mai Tai.
Maybe I need to go revise my policy.
Think about, I don't know if it's Jamaica, Bahamas for you maybe, or, I heard Bali's nice at this time of year.
Right.
Good. Well, I really hope that this was a ton of information that we were able to get to you all. This is a super important topic, and whether you start now or spend some time thinking about it, I think this is something that everybody in the third decade family needs to have is life insurance. So is there anything you want to close out with?
I think we've pretty much hit it, enough times that you know our philosophy on it. But what I'll say is that we're going to have a lot of different resources in the link to this episode. So if you go to the description in this episode, we're going to have life insurance calculators, how to look for good plans, lots of different places to point you to help you in this journey of finding a good policy for yourself. And just to, again, encourage you not to wait. And I guess maybe I will go back and say one thing. Mm-hmm. Again, if you don't have somebody who financially depends on you, you're not going to be a person that needs a $1 million policy. That work policy might be sufficient, or you could just get, a $20,000 policy so that your family is not burdened with the end of life costs. And those would be very, very inexpensive. So it just completely depends on how much your income impacts another person, whether or not you need one of these policies. So I guess I will always give my third decade spiel at the end. Mm-hmm. I think a lot of our listeners are alumni. Thank you for sticking around with us and for still coming back to increase your knowledge base with our staff. If you have friends, of course, I know many of you are already pointing them to our program, but please continue to do so. We are always expanding our curriculum and developing supplemental resources as well. And if this is your first time finding us, please check out thirddecade.org. We are a nonprofit that provides education, personal finance education to people 18 to 35 years old. And we're really working to lessen the gap in knowledge, dependent on what family you came from. We don't believe that should be an impact on whether or not you can have a secure financial future. So please check out our website, thirddecade.org, and apply for our program if you have not already been a beneficiary of it. Thank you again, Joe'Mar, for joining me on today's episode.
Absolutely. This was fun. I'm excited for this new format. Excited to see where we go.
Thank you for joining us on the Third Decade Podcast. Remember, building your financial future isn't just about dollars and cents. It's about empowering yourself to live the life you want. If today's episode gave you new insights or inspired you to take action, we'd love for you to share it with someone who could benefit. Together, we can turn financial uncertainty into opportunity. Until next time, let's continue to embrace the journey ahead and take control of your financial future.